Welcome back to the Armchair Trader podcast, and this week we are back in the world of cryptocurrency and digital assets, which is an extremely hot topic at the moment. And so as a consequence, we're very lucky to have Jeff Gao on the program. He's the new CEO of Cypherpunk Holdings, and he's very kindly joining us all the way from Australia today. So welcome to the podcast, Jeff.
Thanks for having me.
So basically, I thought we'd just start off talking a little bit about Cypherpunk Holdings itself, what it is. Can you give us just a brief summary and overview of Cypherpunk, the company?
Sure, no problem. So Cypherpunk Holdings is a listed entity, listed on the Canadian Stock Exchange and also dual listed on the OTC markets in the US. We are a crypto-themed investment holding company, but otherwise actively managed. And we have a number of different themes that we employ in putting together a portfolio of assets which we believe will serve investors to the extent that it is designed to beat and exceed the performance of underlying cryptocurrencies that investors would otherwise be able to purchase in their own retail accounts. And the way we do this is we have essentially three layers of assets. One is private equity and venture capital deals. These involve bespoke and privileged deal flows that retail investors wouldn't otherwise have access to, either from a sophistication perspective or from a capital perspective. And some of these are quite esoteric in terms of the amount of analysis and the level of analysis that you have to do to understand them before you can onboard them. We also, of course, hold cryptocurrencies as well. Most importantly, Bitcoin, which has primacy in our portfolio, and then we actively manage that basket in a manner that beats buy and hold. And then finally, we have what I call operationalized assets, including IPv4 addresses, which we lease for quite a decent yield, and then also Bitcoin mining assets as well, which we have deployed across North America, utilizing renewable low-cost energy sources.
And the Cypherpunk, in some of your previous communications as a company, you've stressed that part of the sort of rationale of Cypherpunk has been investing in the digital economy and specifically in privacy assets and in the premium that will be placed on privacy assets going forwards. It's very much a play on the future of finance and the future of digital privacy. Can you tell us what you mean by privacy assets?
Cryptocurrencies, by virtue of their constitution, the fact that they're built on public ledger systems, which we are commonly known as blockchains. These are systems that are deployed on a public domain, so they're visible, they're transparent, they're accountable, and they're auditable. That said, that transparency also has downside in that with sufficient analytics and with sufficient time having passed by, if you were to analyze certain wallet addresses and piece together behavior, you may be able to, with a fair degree of confidence, identify particular users, or at least get pretty close to a particular user. So as a result of that, a number of different technologies have been explored since the advent of blockchains, in particular Bitcoin, in order to try and obfuscate some of that identifiability. And this is only one category or one line of effort towards ensuring that there is greater privacy without necessarily compromising transparency, although there is always a balance there in achieving some sort of an equitable compromise. But some of the privacy assets that we've invested in, especially around wallet tech and storage, is really designed at preserving the identity of the individual or the entity that is undertaking those transactions on what would otherwise be a public ledger system.
It's obviously an extremely interesting and fast expanding area. It's something that we can see a lot of investors are interested in now, and a lot of them are basically traveling down the same roads. A lot of them are accessing the market through cryptocurrency wallets. A lot of that interest in turn is being driven by the price action. A lot of investors are seeing with some of the major cryptocurrencies, and every day really Bitcoin and Ethereum are both in the headlines. So this is creating a fantastic amount of interest, and we're seeing communications coming into us pretty much every day from investors asking about how they get into this kind of market. What's your, as someone who's much closer to the market than we are, what's your feeling on crypto prices at the moment? I mean, I know we've got the opportunity to put this question to you as someone in the industry or close to the industry. What's your feeling on where the Bitcoin price and the Ethereum price are going at the moment? And do you think that this is investors going into these assets because of inflation, or do you think it's more just the crowd is interested in the fact the price keeps going up?
Well, look, that's a very interesting question, and there's a quite bit there. So I'll see if I can maybe take it step by step and just divide it into several chunks and try and address each one of those chunks in turn. So I guess the first part of your question is, essentially where our prices going given where they are at the moment. Bitcoin and Ethereum, for example, being at all-time highs. I think it's important to be not non-dogmatic in these types of situations, whether you're an investor or trader or even just someone who's a spectator looking to get into the market and get some exposure. What's important to us here at Cypherpunk is that as custodians and as stewards of shareholders' wealth, that we play this accordingly, appropriately, in a manner that is non-ideological, but rational and realistic and certainly practical. So it is important, I think, from a thematic and from a thesis perspective to have an overall direction. And on that, we have privacy themed principles in place that drive our main investment allocation decisions. With, of course, professional money management best practices overlaid on top of that. In terms of managing our crypto assets, however, we want to achieve a number of objectives. One, we want to, broadly speaking, stay long so that we don't miss the upside. Number two, we want to ensure that any crypto assets that we have on our books don't simply play the role of a pet rock where they just sit on your books. Because if they do that, then all they're doing is taking advantage of the price appreciation, which retail investors would otherwise also have access to if they held it in their own accounts. But it will also be subject to the aggressive drawdowns that plague the crypto market as a result of its inherent volatility, which, by the way, looks a lot like commodities. And this is actually one of the reasons why I got into the crypto market in the first place. Because, like any diligent investor, and I try to consider myself as a student of investors who are diligent, who have traveled this path before me. I accumulate gold on the side, and I do it incrementally and iteratively. But it is very clear, especially over the past 3 to 5 years, that cryptocurrencies in general and broadly speaking have taken the shine away from gold as an inflation hedge, rightly or wrongly. This is simply the market voting with its money. And as you can see, that gold, despite its recent rebound, having touched, I think, 1630, don't quote me on that, and having recovered, is still really having trouble leaving the 1800s in terms of price action. Whereas crypto, on the other end, has essentially traveled tens of thousands of percent, right? If you, for example, look at a 3-year time horizon, where gold is essentially a flat line, even slightly negative depending on where you start that chart. So in terms of what the market thinks would be the better inflation hedge, or whether the market's just suffering from FOMO or just want to be where the action is, much of gold's shine has been taken away, and that's being loaded into crypto. There are still investors in gold, but it is very much playing a supporting role in this inflationary story for anyone who buys into that narrative. And then on that, the goal of Cypherpunk Holdings as a steward of investor wealth with respect to management of cryptocurrencies is to ensure that we profit on the rip as well as on the dip. And the types of partners who we work with and the types of structures that we put in place is to ensure that one, if it rips, we do not miss the upside. And two, if it dips in a trending bear market, that the extent to which we suffer drawdowns is in no way as aggressive as a pure play HODL position, buy and hold position, which means that at the bottom of that cycle, we're going to have a lot more capital in reserve to go all in back into the market and ride that wave right back up much more forcefully than someone who simply bought and hold passively.
Within Cypherpunk Holdings itself, you actually have quite a considerable amount of cryptocurrency. Are you able to give us just a short summary of how much crypto you have at the moment?
Yeah, roughly speaking, and we publish these numbers as well. Roughly speaking, we have around about 400 Bitcoin and around about 500 Ethereum on our books at the moment. These fluctuate at the margins as a result of buying selling action as per our management mandate. And so that is the extent of our treasury at the moment. That said, our mandate is such that over time, our Bitcoin position will only grow relative to our altcoin position. And I consider Ethereum to be in the altcoin basket. It is also exciting to me and then to the other members of the investment committee that we're looking at other opportunities with other altcoins as well in terms of their utility and what we can do with that. But that is a working play. So I can't talk too much about that on this occasion, but I think the market will soon hear something from us on that front in terms of some of the utility tokens that we will look to take advantage of. But we're actively investigating those opportunities at the moment.
And we're seeing a lot more interest. Also, I mean, it's a bit of a saga, but we've seen recently launches of the long-awaited Bitcoin ETF in the US, and we've seen a similar launch in the Australian market where you are. There have been some other listed opportunities for investors to get exposure to cryptocurrency. Here in the UK, those have been more limited because the regulator has banned sort of OTC derivatives based on crypto prices, and in fact also crypto ETFs. That may change. But I wanted to get your view on this, particularly since we've seen these recent launches into the market. What's your opinion? Do you think we'll be seeing more such launches? And certainly that the asset flows into them have been massive. It looks to me like they're here to stay.
Yeah, and Stuart, just want to say thanks for the opportunity that Armchair lended to myself recently to write an article on that topic, which is now available on your website. But I just want to talk about these listed opportunities in a little bit more detail because they're not all created equally. But just broadly speaking, I think they are good news. They're moving the industry in the right direction. It represents a step up towards maturation, and more access is always better than less access. In general, there are two types of listed funds. One where they trade and manage positions in the underlying cryptocurrency, but not necessarily holding the currency or the spot itself, perhaps trading in the futures market or using derivatives. So that's one type of fund where they try and give you notional or the equivalent of notional exposure to the underlying. And then the other type of fund is where they're investing blockchain and crypto like equities. For example, the Australian fund launched by Beta Shares, and then there's a fund in the US. Um, these types of funds, they invest in companies that invest in blockchain and crypto assets. So, for example, Coinbase, um, Square, PayPal, anyone that has crypto on their books or otherwise have R&D projects or in fact commercialized projects uh, relating to or of blockchain, these funds invest in. But otherwise, these opportunities you can buy yourself as a retailer because they're listed. And if you go into the fund details, the fund breakdown, you look at their top 10 or top 50 holdings, you can see exactly what those proportions are. And if you wanted to, you can replicate that. But of course, a lot of investors don't have the time or the opportunity to do that. So the fund is a convenient one-stop shop for them to get that exposure and be a fire and forget solution. In terms of the Bitcoin ETFs that recently launched in the US, the likes of Valkyrie, Van Eck, which will soon come online. These types of funds essentially don't invest in the Bitcoin spot market. They invest in Bitcoin futures, which are products regulated by the CFTC and the Chicago Mercantile Exchange, simply because the US regulator, the Security Exchange Commission, deemed it necessary to monitor and play these opportunities close to the chest from a regulatory perspective. And so that's why, as a result of a lack of confidence in the underlying spot market, in terms of how loosely or unregulated they are, the next best option in the interest of progress to ensure that there is access to the general public within the US, but at the same time ensure that there is that sufficient regulatory overlay from the SEC's perspective, that this would be an interim compromise until something better comes along. But having said that, the SEC chairman, who was appointed in February of this year, Gary Gensler, is very much a fintech proponent and a tech progressive. But of course, he has two masters to serve. One is his passion and what he believes in. And I think that's pretty clear based on his track record prior to being announced as chairman of the SEC. But he's also got his other master in Washington, D.C. as well. So it's not an easy job for him to play. He can't look like he's taking sides. But I think what's being done at this point in time is real progress. And it's important for investors to focus on what hasn't necessarily materialized at this point in time, but what has yet to materialize going forward.
The other thing I wanted to ask you about was crypto gaming. I mean, this is crypto gaming assets. This is obviously very new as well. We're starting to see a lot more investor activity in the NFT space and in gaming related tokens. Is that going to be an area of interest for Cypherpunk going forwards? Do you think that could be a growth area and a sort of legitimate market for investment?
Yeah, I think it's an area. Well, I know that it's an area for Cypherpunk Holdings, and I believe it's an area of interest for like companies as well, simply because the advent and the emergence of these passive funds in crypto have forced us to lift our game and move up the value chain. So it is definitely an area that we're looking into, and I'm doing analysis from a first principles approach to essentially analyze some of the deal flow that's coming through our door and making appropriate recommendations to our investment committee as to whether certain opportunities will go or no go. So again, that is a work in progress at the moment with respect to Cypherpunk and what we're doing in terms of beefing up our portfolio, and we hope to perhaps once we've done that due diligence, make announcements sooner rather than later. But just with respect to crypto gaming, there's again a couple of articles that I'm writing for you guys. One which will be released imminently. The first part to the story of crypto gaming and how it came about, looking at the metaverse to begin with, and then next week a second installment to that journey. But I just want to say, crypto gaming is revolutionary, and again representing a maturation in the industry because it tries to rather successfully, although not perfectly, align with underlying economic activity and reward centers that are important for participants. And really, before you want to look at crypto gaming, you really have to think about this idea of the metaverse, this terminology that seems to be kicked around as of late, especially after what Facebook has done to try and adopt that phraseology for its for its rebranding. But what the metaverse essentially is you take the physical environment that we're all familiar with and you overlay it with digital technology in order to enhance the social experiment and various social dynamics that are at play whether it be for leisure and entertainment or for work. So the metaverse is really a coming together, a melding of technology and the underlying economics of what we do in the real world to deliver a radical and revolutionary new experience. Simple examples of that include augmented reality and bionic augmentations that enhance a user's experience, sense of hearing or sense of sight for the blind, for example. Those are augmentations where you create digital renditions of the real world for that particular user in order to make up for a sense that was otherwise lost in that user. And of course, you can take that a little bit further and think about how information is shared between people and how information can essentially be visualized to tell a story in a more concise and coherent manner, and how that can be built into everyday life and everyday experiences. So that is essentially the metaverse. And how does that lead into crypto gaming, for example? Well, you have to think about what people do when they play games. When you play, a single player game, for example, an immersive single player game where you sit down, you go through the whole story arc of it, and you complete challenges and all of that, that satisfies a certain reward center within us. In that, we get to do it in our own leisure, at our own pace, and we get to really allow ourselves to be immersed in the story of that game. Not unlike that of watching a movie, but you become an active participant as well because your actions have consequences and influences within that game environment. With crypto gaming, it's not a single player experience, it's a player versus player experience where you're actively competing against other players. So there is a difference in the way you experience that, in that you got to put in a lot more effort and it's real time. It is highly competitive. You can't just pause the game and, get yourself a drink or a burger or a bathroom break. You got to be there. And it also means that it can be quite taxing, so it can feel like work. So you can imagine that, if you treat that as a normal game, a normal single player game, that's got all those other immersion factors, and the players is expected to pay for it and then not get anything in return. And then on top of paying for it, they have to, spend all those hours at it. To not be compensated for that effort kind of really doesn't make sense. And so this is where, the advent of blockchain and cryptocurrencies and crypto assets really helped to revolutionize that space, where essentially said, if you participate and you enjoy playing as well, right? But then you get something out of it. Just like how, we enjoy working. I love my job, but I get paid for it as well, right? So you can enjoy gaming at a competitive level and be compensated for it. And there's real economics behind that. And it's all based on underlying economic activities that made sense in the physical world in lieu of the metaverse. But now with the metaverse, it becomes enhanced and it becomes much more frictionless in terms of how those reward centers are satisfied, especially at a financial and monetary level. That is essentially crypto gaming in a nutshell, and those are some of the things that we look at when we analyze and evaluate opportunities put in front of us to see whether, what is being written down in that white paper or in that pitch deck essentially aligns with, the natural currents of economic activity and positive economic incentives that would exist in the real world, but then gets enhanced and accentuated through a crypto gaming.
I find it actually really fascinating, this, because it does seem to be almost a massive sort of change in emphasis. Because I speak as someone who as a teenager started gaming on the old Spectrum Plus machines. Not in a month of Sundays could we have imagined, when we were doing that back in the 80s, that the technology and the experience would have already reached this level this quickly. A lot of this stuff was really science fiction when I was a teenager. What really interests me here is what you're saying is people will, and people potentially already are, being rewarded for actually playing games. They can actually earn a financial reward for this, and that this activity in turn is generating its own currency. Basically, these games are can create their own individual tokens, which in themselves are exchangeable. And am I right in also saying that I know there's a lot of publicity around the sort of top 0.01% of players in that community, but that this could actually be much more broad based, so that even a teenager in his summer holidays invests a lot of time in playing a game, he could actually make as much money doing that as he could delivering newspapers, for example.
Yeah, you're on the right track. But you don't want to necessarily start talking about this at the implementation stage. If you just step back and look at it from a principles perspective, there are these activities that are being undertaken by people, and they're putting real time and effort into it that is of value to someone. So there is a supply side to the equation in terms of the time and the effort that you're putting to doing this thing. And then there is a consumption or a demand side to that equation where someone or somebody out there looks at this and go, that is valuable to me and I'm willing to pay something for it. That is essentially the kind of transaction we need to make this whole thing work. Now, in technology notwithstanding, if that relationship, if that reality does not exist, crypto gaming would not exist. It is the mere fact that that reality does exist, and it is very real. It is real not at the, as you say, 0.001% percentile level, but at a much more broad and general level, which is precisely why crypto gaming actually works. Assuming that it is implemented correctly. And there's a lot of teething problems out there, but they're fast becoming solved. And we know that for a fact because of how quickly some of these games have taken off, despite challenges in making sure that these reward centers are appropriately mapped and attributed in a commensurate way. But if you look at competitive gaming and esports in general, where you do look at the top 1 or 0.1 or 0.01 percentile of participants, that has an entertainment aspect to it in terms of attracting viewership, pay-per-view. It has a promotional aspect to it in terms of when you see these players play and you get excited about it, you're more likely to buy the game. And then there's of course the gambling aspect to it. And all those aspects are retained within the broader crypto gaming market. But the broader crypto gaming market has an additional feature which is extremely pertinent but would not otherwise appear in those esport applications at the top tier level. And that is the work that we put into these games, which we play out of enjoyment, but somehow get paid for it as well. it becomes valuable to somebody else. And then you really have to ask, well, what is that value that they see? How is it accumulated and how is it transferred? Well, the value is essentially this. The more you play that game, the better you get at it as an amateur, who may spend 2 or 3 hours a day at it after work because you enjoy playing it anyway, and now you're getting, a little bit of kickback out of it. As you become better at the game, what also improves? Well, your character in the game improves, whatever they may be. You might be a pilot flying a ship. You might be a soldier with particular gear on you, bow and arrow or sword. Whatever those in-game assets are that allow you to experience the game and move through the built environment of the game so that over time you build experience. That experience becomes accumulated and aggregated within the assets that are tied to your character, your avatar in the game. And those assets and their value are embedded and embodied within what we call non-fungible tokens, NFTs, which are programmable smart contracts, which we can, program and code them to do whatever it is that we want them to do. But in this particular case, it is to keep a record, to keep a tally of people's efforts as they make their way through these games, battling other players, doing whatever it is that they do to accomplish milestones within the rules and confines of the game. And it is that aggregation of value which gets stored in these NFTs and which get federated through open exchanges where people can actively buy and sell these assets, right? Because you watch that other player and you know that this is a good asset that they're carrying with them because they're using it to beat those other players under those specific situations, right? That wasn't present in prior games, including something that I just covered in an article that hopefully you guys will get to publish before the weekend arrives. Pokemon Go was extremely popular a couple years back, and Pokemon Go was what I consider to be one of those first metaversal type games that essentially bridged the gulf between the physical and the digital, the physical and the holographic, whereby you're a player, a human player, and you go around collecting these mythical creatures that you can capture, train, and then use to battle against other players. Essentially, cockfighting, but bloodless and virtual. And you capture these creatures, you train them, and you have to spend money training them within Pokemon Go. You have to spend real world money to convert to these funny money currencies within the game that you then use to train these characters. And then as you use these characters to battle other players and their characters, your characters, if they win, gain experience, and even if they lose, they gain experience as well, but just not as much. And then you get better over time, and your characters get better over time, and over time you end up with these really, really powerful Pokemons if you're good at the game, or at least better than average. But then what? They're locked in the game. You can trade Pokemons, but you can only trade Pokemons within the localized environment of that game. You can't convert it to real world money, or at least not very easily, unless someone comes along and willing to pay you for your account and get access to your characters. But there's no active liquid market for it. It's a barter economy. And so all of those hours that you've spent playing Pokemon, and it's not cheap either. You have to pay a monthly subscription to be to have access to the game, right? Especially if you want to have the full gaming experience. There are freemium tiers that you can play on to just participate, but it's not a complete gaming experience. The design of Pokemon Go is to ensure that if you want that complete gaming experience, you got to pay to play. And so you can imagine you're paying to play, you're spending hundreds of hours building up your Pokemons, battling other players. All of that gets locked within these Pokemons, which do have value to you, but otherwise don't translate into the real world. So that nexus, that critical nexus, is broken, right? The nexus between economic activities that are of value, and then that's on the supply side, and then that crucial consumption and demand side where you can translate it to something that unlocks value because it matches with someone else's willingness to pay. That last leg was missing with these what I call version 0.1 alpha releases of the metaverse, of which Pokemon Go is one example. And that problem, crypto gaming is able to solve thanks to the utility tokens that are available through blockchain technology.
So playing devil's advocate here, if you're someone like Cypherpunk Holdings, you can see that this is a fast evolving market. You can see there's an opportunity, and obviously I don't want you to give away too much of the secret sauce here. But how does somebody like yourselves, with a large portfolio of digital assets and a large amount of existing crypto holdings, how do you go about monetizing something like that? What would be the strategy of getting exposure to that market?
It's more than just about getting exposure. Getting exposure is a first degree consideration for us, but equally important is about being able to play in that space, to have a say in that space, and to influence changes made in that space. And we do that by selecting projects and identifying founders who are willing to be partners to us in a relationship that is more than mere transactional, more than us just allocating a part of our capital to that project and holding it passively as you would do, in an exchange traded fund, for example. We're more than just about that. Every project that we onboard, we vet very, very closely. I'm on a first names basis and conversational basis with the founders, and I get to, even if we don't have the expertise within that particular niche domain, be able to, for example, participate at the board level just to work out what's going on and have some say, have some influence, perhaps in some of the, if not day to day, but the governance decisions that are being made within that particular project. So that is how we intend to engage with this industry without necessarily having the bespoke expertise that is required to perform well within every aspect, right? We essentially outsource that to the founders of these projects who we work with, who we invest in. But more importantly, it's about understanding as we onboard more and more of these projects, how do they each work? What is the formula that they use to try and better match effort with consumption and that nexus which is crucial for monetization. So, one of the, I guess, barriers to entry for newbie crypto gamers is the amount of upfront investment they have to make to onboard, in-game assets through the purchase of NFTs just to get started, right? Because you need a character, you need to equip that character before you can go into these arenas and, compete. So it's about identifying ways to unlock that, which is to say, I know you're a decent player, but you don't have a lot of capital because you're in a third world country and you are to come up with 500 or 600 or 1,000 US dollar equivalent in your own currency just to get started in this game isn't really realistic. So is there a like a microfinancing arrangement that we can use to sponsor you, to get you started, to train you up, to make you good at this? And then there's some sort of a profit sharing relationship or arrangement. Do we have anyone in the industry that can build the infrastructure to identify who these players are that show promise? What are the necessary training regimes to have them functionally competent within the rules engine of a particular game? And some of these games aren't just, one-on-one. Some of these are team-based, right? So you got to work well with 3 or 4 other guys within that competitive arena. And then, within a particular setting, right? Because different domains within that same built environment of the game require different strategies and different combinations of equipment. Just how, you have defense and offense in American Gridiron, right? You got these different phases What would be the best assets to equip this group of players in that particular setting. So to be able to identify a portfolio of NFT assets that would do you well in equipping your players, to identify who those players are so that you can invest in them, and to build a platform and the training regimes and the I guess the knowledge base that you would need to make the players that you onboard excel in what they need to do. There's there is a lot of science behind that, which we're starting to come to understand and to measure in a reliable way. And we seek to, as we work with more and more projects in this space, synthesize those learnings so that we become better at identifying future projects and better at working with those founders as partners in those future projects.
That is absolutely fascinating. It just demonstrates just the sheer diversity, really, of the number of different opportunities that exist in that space for cypherpunk. It's almost like in the conventional market, it's almost like a sort of macro strategy. You've got so many different opportunities, so many different new emerging markets to actually take advantage of there.
Yeah, because for some of these guys, this is real money. This is as good money as they would otherwise make in their day job or their night job, and this could be their day job. But it's a good pairing because it allows them to relax, allows them to do what they love to do, to participate in their passion, and it rewards them for their effort because it is genuine effort and it's worth something to somebody out there. There's a willingness to pay as long as you can find it and make that market. And I'm feeling really positive about crypto gaming, even if I'm not a crypto gaming gamer myself per se, because just of how time poor I am. But we hear a lot about this fourth industrial revolution, and I think crypto gaming has been so pervasive. It's touched so many lives, even if you're just a spectator, not a player, that it becomes a lot easier to see, to understand, and to appreciate just what that fourth industrial revolution feels like and look like, to have it happen right in front of your eyes, sometimes to yourself immediately or otherwise to someone that you know, to have that unfold, that unlocking of value which would not otherwise be available in a world prior to the advent of these technologies, both physical and process wise, that brings all of this together and makes it possible. And that is manifesting and distilling itself in a number of different lines of effort. And crypto gaming is I dare say, one of those really obvious and prominent and pervasive ones that's starting to really show some green shoots.
Thanks very much indeed for that, Jeff. I know we're running out of time, I'm afraid, but I know we're going to be getting you back on the podcast in the near future because there's still a lot here to talk about. So what I would also suggest is any listeners, if there's any questions you want to put to Jeff as well, he will be coming back. Hopefully coming back on with other guests as well to talk about the whole sphere of digital assets and also progress on Cypherpunk Holding. So please get in touch with us via our Twitter feed at Armchair Tweets, or indeed contact us directly on the website if there's anything you want us to discuss on future podcasts. But thank you very much indeed, Jeff, for your time today. That has been really fascinating.
And no, thank you, Stuart, as well, because I know that Armchair Trader hasn't traditionally operated or advocated in this space. So for you guys to take this leap forward and to place your trust in Cypherpunk Holdings as opposed to some other operator in this industry is something that we haven't overlooked. So thank you for placing trust in this partnership, and I'm confident that we'll do each other well in ensuring that the message gets out to the general public to create that informed awareness so that people can make an informed decision in terms of where they want to be and how they want to participate and how they want to play in this space. And I at Cypherpunk Holdings and yourself at Armchair, I think we have a real material role to play in that education and awareness piece.
Thanks very much indeed, Jeff.
Pleasure.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.